Good morning, ladies and gentlemen. This is Clueless A Trading Frank. This is the pre-market and weekly start market update for the week starting on April 10th today, 2017. And I'm going to go over a whole quick bunch of charts and a few other things, indicators and stuff that I normally look at in order to make a predetermination, or what I call the Clueless A Trading Predictive Game Theory, or PGT. To chart out a roadmap on what might happen through these extremely volatile markets. A couple of extremely important points for traders, active traders, as well as investors and swing traders, is the fact that we are going to, as usual, we are going to have a choppy, volatile intraday market, where the market, as you can clearly see from the background, this is the SPYs, which have been a fantastic tool for me to navigate the ups and downs and the longs and shorts and capture some pretty powerful profits. The markets are at this point range bound. So let me just dive in and not waste any time. One other quick thing here is you gotta when it comes to trade management, you gotta keep your trades selective. You have to keep them the sizes within small to moderate. And if you go lopsided on one side or another, there are high chances that, given the extreme volatility in the market, what I call structured volatility, the algo HFT programs, the algorithmic high frequency trading black boxes, will pretty much hit you hard, both on the long and short side. There are mixed signals right now, and let's see how this week pans out. It is, after all, Good Friday. This Friday, and generally speaking, historically on a seasonal basis, we don't normally tend to crash on the Thursday prior to Good Friday, but you know what? You never know these days. So let me kick off by giving you a quick rundown on the Quad Algo HFT platform, which has been a phenomenal tool, to say the least, and you've seen that in action over and over again as I put out alerts based on different indicators and such that I see on these. So we have a very tight trading range here between the trading range that we're looking at right now. Upper end is 236, the lower end is 234. Okay, that was the pivot from Friday, which is going to be adjusted as of the market open today, and the pivot at that point was 235.81. You could clearly see that on Friday we were attempting to break above the pivot, and basically we made a double top right there. I showed that in a different form. I apologize about this Zoom stuff. I gotta fix this thing. And let me see if I can actually do it right now. Well, I can do it right now. So bottom line is that what happens is you have the 2361 mark on the SPX, on the E-minis, give or take 2363 or a little bit higher on the SPX, was formidable resistance. So that's going to be the case again till we actually break out of there. Now, these breakouts that I'm talking about are not the type of breakouts where you're just going to get a 300-point type of moonshot. Look, anything can happen, but we have to work within reason of within a reasonable bound of probabilities of where the trades can take us, and not some sort of castles in the sky type of go to the moon type of scenarios, right? So on the lower end, you have 234, which has acted as pretty tremendous support, and on the intermediate lower end, you have around 234.60. Upper end, you have 236. This trading band alone can deliver anywhere from 80 to 120% on SPX trades, given that if the volatility is a little bit more linear. What does that mean? That simply means that if we get a straight line down, you can get those type of returns pretty fast, right? But if it's choppy, like we see, then you got to capture the meat in the middle. In other words, if you're up 40%, 50, 60%, you got to take that off. At this point, if we break this, then the upper end, the next resistance level comes in right here. All these are placed on my charts repeatedly, which are shown multiple times during the day, for traders to follow and manage their own, for effective trade management, as I like to call it. It's not rocket science. So this is the upper end where we had, again, a double top or major resistance before we dropped off. This was one of the largest days, as you know, where a significant amount of clueless trading traders made some extremely powerful money because they followed the alerts. When 60-cent lottos go to $21 at the end of the day, well, that's a black swan, okay? That's not something that happens too often. And this move alone from 60 cents to $21, and I certainly like to highlight it in the sense that not only was the alert put in place on, I believe it was the 2360 or 2365 puts on the SPX that was alerted right before, right after the Fed came out, and they put that warning out, mild warning that the stock market valuations might be too high. Well, that's all I needed to know. And I didn't expect it to fall that dramatically, a 100-point swing, I believe, immediately. But then at the same time, for those Wednesday options expiring the same day at 4 p.m., um, it was an absolute lottery ticket. Well, that's one of the reasons why you stick to true to say trading, and you want to refer a lot of people to it. It's not just because we are expecting drops like this every day, but that the fact that it's so real time that if you act on it, even with a small amount of money, $600 can go to 21,000 bucks. Well, that's absolutely crazy if you really think about it, and it's certainly not advisable for anyone that they go ahead and just hold it all the way down, because we don't know if it's going to get down there. But even smaller amounts on different strikes on the puts did extremely well. All right. So case in point, since that drop, we have been moving sideline. Either we break out here, that's going to be another major level of what I call a sell zone. And of course, then we have the 237 level, which I expect the market to hit by Thursday, which is roughly about 2370, 2375 SPX. That should lift the trading stocks that we own to a substantial degree, even though selective trading stocks right now that we own are already up. Tesla's up about $6 or $7. Amazon's up roughly 4. NetEase is up about $1. Alibaba is up about 14 cents. We need some power moves on the biotech side, which has been actually extremely choppy, and despite tactical charts, they haven't really gone through any sort of technical breakout. Once, if and when, if we do this, that if we basically break out, let's say we fall below this red line, if you want to call it the red line, that seems to be the political term these days, crossing the red lines. If we cross this red line, then the 233 level comes into play. These charts are extremely, extremely powerful, and issue trigger signals, and are very easy to see on the eyes. So here you have a pinch Bollinger here. It looks like a small reversal hammer here on the 1 hour pre-market thing, but there's no, again, the market might want to go up here and then hit a roadblock. Algos are extremely quick. You have to be quick with the profits, and if you're not an active trader, then in that case you do not want to be trading any large sums of SPX or RUT options, period, because they're like futures, and they can give you a double within an hour or less, many cases less, or they can just wipe you down 50% in a couple of minutes. That's just the nature of the beast. So playing small amounts is a smart way to do it. Saying all that, let's take a look at the slow stochastics, what we call Mr. Slow Stow. So far, it's still constructive. You have a pretty decent bottom here when the market hit the 234 level, and then it got close to the overbought zone. This is the overbought zone, but it didn't quite get there, because if it did enter the overbought zone, then we would be hitting this mark here. We were hoping on Friday, but it didn't quite do that. So right now we are creating what I consider to be a kind of a gull wing pattern, which is just my term, which might push itself higher. And again, the white line here, which is the 80 level on the slow stochastics, similar to the relative strength index, the RSI, could bring us up again towards the 236 mark. Getting up here for SPX long calls, which were suggested on Friday and earlier, would be fantastic. You'd want to sell pretty much right away, and wait for a directional move or a reset on what might happen after that. So that's pretty much it. This is somewhat constructive. Again, this is the oversold zone. I even put arrows and markers. It can't get any easier than that, and this is where we are. Okay, so we don't know whether it's going to come oversold again. There could be a quick sell program right at the open. These things are expected. As long as the trading range doesn't break, we're okay for the upside. Let's take a look at the SPX. That is not the one I was looking for. but I can adjust it. Let me see here. So here's your SPX. Let me get some, and I'm going to show a very clean chart. Now keep in mind this was the pivot from Friday, so it's going to be adjusted as of this morning, and I'm going to just show you the SPX. The upper end of the SPX since the flash crash. That's the slow stow in there. Still climbing higher. So we need the crossover to be intact. The fast stows move a lot quicker. As you know, resets very quickly within 15 minutes to an hour. There's your P that I normally put for pivot. All these real-time charts are posted on a time sequential basis all day long. So bottom line is that you need to go through the real-time Twitter feed, even if you do not have time during the day, at the end of the day, so you understand the storyline that's developing in the form of technical patterns in the market. So if you look at this on a broader view and you kind of sit back, push your chair back a little bit, then you are seeing that we have a, what I call, again, my term, a Texas bullhorn pattern, also known as a inverted head and shoulder. That inverted head and shoulder, if it resolves itself on the upside, is basically between 2370 and 2380. There goes the zoom thing again. So bottom line is that that's the broader picture. You can see that. Pattern analysis and pattern recognition is absolutely critical for technical traders. And I teach that extremely well, as evidenced by even this weekend's ACH early in the day for 2 new members, and they were pretty amazed by how these things work. And obviously somebody has to show them very clearly as to how what the patterns are. They have to have some idea on it too. So once this, so we almost got there, but we didn't get that part of the pattern what do you call completion, which is in that 2380 to 2390 level. Will that happen? I have no idea, because at this point we are in a trading band, and that trading band could break down. We have a lower end of 2347, which also happens to be the support right there. That's the support. And the upper end of the band is 2368. I'll take 2365 and 2352 as a trading band, and any breakout over this also encounters a resistance here at the downward sloping Bollinger. So you don't need to get all jiggy and euphoric just because we're breaking out here, because these levels will be met by fierce program selling. If this level is retested, then that's fantastic. That's great. So whichever the case, that's what we're seeing in the S&P. We're seeing a large inverted bullish head and shoulders that's still in play. This segment of the move, let me clear this out. This segment of the move is I would call it, one could call it a dragon bullish only if it breaks out, right? At this point, it's in a trading range within this mini dragon bullish pattern, and we could also do a triple bottom here, slip down towards 2352. All this can happen within 20 minutes of the market opening, just so you know. So, and then once it does that, if it moves higher, there goes the zoom factor again. My apologies, I do have to fix that. There. So if it does that, then this comes into play. If the most optimistic scenario for the bulls is that this big drop, the flash crash drop, okay, this is the flash crash drop, what I call it, the mini flash crash drop that we encountered earlier last week, that this is negated by an exact 2 green candles, which takes us out there. That would be the most optimistic scenario. Do pattern symmetries, is it possible this happens? Yes, it is. It's also possible very well that we break down below this range and we retest this 2320 level again. And all these can be very, very quick. Now, this is a significant, you can see that this is a significant hammer reversal, significant, followed by multiple candles. So there was some pretty serious money that was deployed here. More importantly, some major short covering, institutional short covering took place here. Same thing here. So I would consider the 2344 level to be of critical support, intermediate support at 2350, upper end of the range at around 2364, which would be fantastic to get today for short-term options players, and then a very bullish scenario at around 23.78. End of story. Now, let's move on to a different screen, and let me see if I can move this thing here. In fact, I'll move this into, there you go. Perfect. So this is a chart that needs to be monitored and replicated on your screen. I would say, there you go. Oops, sorry. Making it smaller to fit the recorder here. And I think we're good to go. So without, let me stretch this a little bit so it's easier on everyone's eyes. And of course it disappears. Okay, 1 second. Okay, that's good enough. So what you're seeing here, again, if you sit back a little bit and you see a very large, I do apologize, seriously. So I'm just going to, without drawing it, I'll show it to you. Very large inverted head and shoulder, okay, which almost went to full completion up here at the 25.75 range, but didn't. And that was back on the 3rd. I'm sorry, at the end of March. It pulled back, created a double bottom right there, a double bottom, a complex double bottom. Again, inverse head and shoulders. Remember, in the inverse head and shoulders, for people who are very new to technical analysis, is where the head is here, not the head is here. That's a head and shoulder if you want to look at it that way. I'll go over that in a second. So it created that, and it blew through this on the 5th of April, and then touched and did retest that flash crash origination supply point. Okay, right there. So it did retest that. Now we're back to this zone again that I showed on the Algo Quad HFT platform. And remember, this is investing.com. It's available to anyone. It's free. Just put your email in there and move on and move on. And it's fantastic. It's really, really helps on all types of trading. And it's easy to see on the iPhone too. Larger the screen, the better. So this is where we are right now. These levels are very precise because of the structure that I've drawn over it. Downtrend lines, supports in red lines here. Okay, S1, S2, S3, upside range 2361. That's on the. These are the E-minis. These are the futures, and the bottom line is that's the wide range that we could encounter over the next 48 to 72 hours. That's the intermediate range that I could see today. So again, this is a completely robotic, range-driven market. Until we break out, then we'll fulfill this pattern again, which would be a major sell point. Or we could have a breakdown here, which below the 2346 level, which could quickly drop us here. And all this can happen on any news flash or any random movement in the market. You don't need to find a reason. This is looking fine, so it's pretty okay for now. So keep on tracking this chart. This is an extremely important chart. It's not that hard. And this shows you the bigger picture of what's going on. The large macro Texas bullhorn / inverse head and shoulder with the head here, left shoulder, right shoulder, which basically went all the way up, pulled back again, created that W pattern, and a dragon bullish, zoomed higher, did retest the flash crash highs, came back down, and kind of replicating itself. So if this is, so again, I don't know exactly. You cannot tell by here whether, now this is a pinch Bollinger. Look at these Bollinger, these waves. Train your eyes to look at these things. It's not that hard. And this pinch Bollingers here are suggesting there's a move coming. Now there's a couple of things going on today, which this week, and that's how I'm going to end this thing, which are very important. First of all, our good friend and fearless Fed chairman Janet Yellen is going to be speaking. I believe around 4:30. This is Econ Day. You can check it yourself. So you look at all the stuff going on. It's a busy week before Good Friday, Retail sale, I'm going to start off by today. So you got Janet Yellen speaking at 4:10 p.m. So markets could react after hours pretty substantially because she's going to be asked about her plans to reduce the balance sheet. In other words, get slowly but surely sell the holdings of Treasury and mortgage bonds that the Fed holds in its God knows $5 trillion portfolio. That's always all part of quantitative easing when they were buying all that stuff, remember? And so now they're saying they want to start reducing the balance sheet, which is a good thing, but they have to do it gradually, or else interest rates are going to go sky high, and your last hopes of buying anything cheap, whether it's a home, a car, or your anything interest rate sensitive, is going to become far more difficult. Obviously, she's not going to do that and destroy the U.S. economy in one go. So anyway, so this is real important today. Tuesday kicks off with another Fed chairman, Neil Kashkari, ex-Goldman guy, right here speaking at 1:45 p.m. He's not that big a player. He's a young buck, and what he says will have impact on the markets, but I don't think it's going to be that crazy. The JOLTS thing, the jobs data is important. Red Book will give us an idea on the retail sales idea somewhat. The small business optimism index is okay. It's not that crazy a market moving event unless optimism really falls out the bed, which I don't think is going to happen. Wednesday kicks off. Again, if we move up into Tuesday in any large way, then it's going to be Hump Wednesday. We're gonna be resetting a bit, as you know. So you have mortgage applications, import-export prices, Atlanta Fed business inflation expectations. Very importantly, the EIA petroleum status report. Oil's been moving very nicely, as I showed off the lows at 47. Please feel free to review my charts and be amazed, because that was a fantastic forecast, as technically speaking, on the charts. And look at oil today; it's 52 and plus. Treasury budget, not that important. So bottom line is that Thursday is real important. Lots of numbers, jobless claims, PPI gives you an indication of inflation data. And then you got the Baker Hughes rig count, which is important, not that important. Money supply used to be very important when QE. Remember QE, when the Fed every month was buying. They would announce how much Treasury and mortgage bonds they would buy. The money supply was very important at that time, so don't worry about that. Friday, Good Friday, we have banks open, markets closed. Very interesting, right? There you go. You got CPI, retail sales, very critical. Okay. And business inventories, that's also very important. But the key thing is Janet Yellen. Okay, the Red Book numbers, the EIA petroleum status report, those are the ones to focus on. Whichever the case, we got a, let me see if I can drag this into the picture here to get the Tesla traders excited. I'll be doing more reports on individual stocks, which I know you guys will love. But then I show so many charts during the day that I don't have time to. I'm trying to bring this inside the thing. Anyway, this is Tesla. I'm trying to get this inside the box, and I am successful. There you go. So you got Tesla here. This is just one of the charts that I put across, right? So you got a channel. What's the upper end of the channel? You do the math. It's around 315, 317. Stocks at 308. What can I say? If somebody just tracked my charts and followed it bits and pieces, you don't have to put your whole lot in there, because after all, Tesla could be down 20 bucks one day. But if you put a little bit at a time, look where you'd been. And you still have time. So when people say, oh, I missed it all, well, you didn't miss it all, because you got to be, this is what retail traders with no technical know-how say, oh, I missed it all, market's too high. No, you got to look at it with a balanced, neutral view. Very hard to do mentally, but why not? We're not here to be weak. We are here to be strong mentally. We're here to better ourselves by being mentally strong. How do you get mentally strong in this business? By tracking technical charts, by being smart, by looking at that. So Tesla's looking really good. We have Amazon, and again, I've shown all this chart. I told people that this was a consolidation low. Put out alert out there. Stock is right now up 3.5. It's up here somewhere around 89.50. So it's up here somewhere right now, around 900. And we shall see. On that note, guys, you've all been fantastic. I know many non-technical members are starting to get focus on the charts when they realize that price watching and emotional trading has done nothing but hurt them. Have a great day, and let's have a great week. God bless the USA.